investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, this last day of June the 28th, Friday. We're looking at the Dow, having been down quite a bit earlier on, is now up 204. Now, this is going to be, let me go through this. It's Technical Friday, so I'm going to go through this technically. Let's go through the daily chart. The daily chart made a peak D at 40,077 on the 20th of May. It pulled back very sharply. We went short that day. It pulled back very sharply in the spectrum of what we have for subscribers to the opening call. We are long, the diamonds, long-term long, but I wanted a trading position. So we were short, and the Dow pulled back very sharply to 38,000. So that's a 2,000-point decline. And then that almost a round number low at 38,000 on the 30th, I thought it was 29th, 30th of May, started this big move up. And that's gone to a green 9-period moving average, a 9 moving average over the 14, the 914. The MACD was positive. Stochastic did go to over 80%, and then it kind of started pulling back. We went to a peak C. Now, I did not change that short-term trading short to long, even though technically I said that should be done on a purely, that's why I put the up arrow and said a buy signal. It should be going to a buy mode, and it'll only go to a buy mode if the rally from the peak C pullback can go pretty much halfway between the 39,571 high and the 38,900-ish low. Well, this is where we are. Now, this is going to be very important because, look, the diamonds already made that peak D. That was at 395.59 5 sessions ago. So, and we pull back, and that 9-period moving average has remained strong. What I'd said is this cup formation from the left side, 39,000, let me just go to the Dow because that'll be the one that we really need to talk about, 39,800s back in April, then retested it just slightly above at 40,077. That was, in fact, a double top and produced a cup formation. And if there was a pullback, if we had to break sharply underneath the 37,750 low of the 17th of April, underneath that rectangle low, the cup low, that would really be a very big negative. But I anticipated there would be some kind of a sideways move in this rectangle, and that because we've had really 1, 2, 3, 4. This is the 5th week of trading in a rather narrow range, without going close to the top of the 40,077 level, that the sideways containment should continue. That was my stance, and it has been my stance up until just a few moments ago. And I'll tell you why I'm beginning to change it based on how the technicals are acting. So that's the Dow. So the Dow says that the Dow daily chart could still make a new leg D above 39,571. If it stalls underneath that peak D from 40,077, that's not the kind of action I like. I like C's to power through the previous high, and then you can go D even higher. So this is all within the rectangle. That's number one. So I need to just clarify that the action that we're looking at this particular moment is very powerful. Why? Because the 9-period moving average, which I call the indicator of last resort that I love to use, it had a chance today to start to pull back, and by Monday or Tuesday we could pull back to have a peak. That peak C had a pullback that went to low lows and lower highs. That's not happening. So that's number one. Number two is, for weeks I've been talking about the weekly charts that are so positive, and that I'm really looking at the shorter term. The reason why we keep trying to short the S&P, sometimes we make some money, sometimes we don't, is because within the context of what we're looking at, now I can go to the S&P, so let's do that. That 9-period moving average in the daily chart hasn't been pierced yet. And even today, it's broken from being sitting on the 9-period moving average to now above the 5505.53 high of six sessions ago. That to me is really good action. The MACD is actually, it's just positive. The relative strength is less than it was before, but it's still positive. Stochastic actually is at 85%. It's pulled back, but that's still very good. And the on-balance volume is good. So as I look at this, it has gone from the potential of a pullback today to being very strong. I'll talk about it. I won't talk about it politically. I'll talk about the expectations politically. All right. Meantime, that weekly chart has gone to an all-time high, and it's holding beautifully. It's gone into the Chapman monthly inside track repellent zone. And if at any point in July, since this is still June, if from the 1st of July, that's Monday, the Dow is anytime from right now into July, if the Dow is above 5625, it's broken this inside track repellent zone, and that's fantastic. Okay. With that said, the QQQ has only now, as we're talking, 486.86 was the high. 6 sessions ago. No, 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions ago. And today we're trading at 486.69, just under it, with a really good chance that it's going to try to take it out. That's important. And the weekly chart has gone this is very positive. And if we're looking at the monthly chart, it's only legs seen. It says the QQQs should go to higher highs in 2024. IWM, now this is really important. The IWM is actually up $1.54. It's not great, but it has snuck its head above the inside track repellent zone. So this is Technical Friday. So let me show you what I normally do. And it's usually a bullish sign when you take the ictus, the fulcrum, the top part at 209.77 back in May, that high. And now you take that, keep that pinned to the high, and you take this, and you now go to the outside of a wick of a candle, the one on the 12th of June, and you raise it and you say, aha, this is good. Now we've got another target to the upside of the repellent zone because it's already broken that. And that says now you can get the bigger picture, which is actually the weekly chart, go to the high that was made way back there at that peak E that was before the 209 high, and see if you can draw a trend line right there. Right there. And that's your trend line. And that's really important because what it does is it says, I'm not going to do the inside track, it'll be a little messy. It says the target on the upside in July has now got 294, let's call it 295 as a potential. And it's really important if it's going to get there to do it in the next couple of weeks. I'd prefer to say the next week, because if that's the case, it says finally the Russell 2000 ETF is doing its job. So we've got a break coming up. I'll be back. The Dow is now up 217, but the S&P is up 0.73%, up 40. That's really good action. I'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, that means I also need to look at the XLK monthly leg D. We've got the weekly and G/B, all technically very good. A little bit of weakness in the MACD and the stochastic in the daily chart, but the line is over the 14 and it's trading quite nicely at 229.82, up 3.47. I'm looking at this and saying there's a potential test of the high that was made at 232.17, 232.59. Still, it did pull back, it gapped down, and now it's trying to fill the gap. It has filled the gap, doing very nicely. This is the S&P Select Tech Spider Fund. Now, a couple of things I also need to look at here, and that is the semiconductors. So the SMH is having a good session today. The high was at 279.57 on the 20th of June. We did go short there. We're actually taken out of that short. We had really good gain in that short, but we got taken out. And now I'm looking at this and I'm saying, you know, this rally in the SMHs is good today, but it's really not that great. And I would not be surprised, and this is going to be at least my contention for the moment, that the sideways action we're looking at, consolidation that I'm anticipating in the semis, is going to be going on for a little bit longer. NVIDIA, look at that. It's not a big deal. It's up 2.66 at 126.62. Avagio, which is a Broadcom, there we go. That's trading up 43 at 1,631. Now, that is a peak C. There's no other way I can count that. I can't explain it other than to say it's really unusual to go to an all-time high and then fail at a peak C. It hasn't failed yet because the starting point is way down at 1198, I think it is, 1260. No, it's the low. 1197. Other was under 1200. 1197, and here it is at 1630. So it has room. It can have a whole consolidation for a couple of weeks and then build another move to the upside. In fact, it could pull back and then make a peak D underneath that C, and that will negate that C. All I'm saying is, Avagio looks to me. This is Broadcom semiconductor. It took over Avagio, but kept the Broadcom name. It looks to me like this is digesting gains. I don't want to go through it all. Advanced Micro Devices, much better move today, up 5.50 at 164.97. Now, this is what I need to look at. And I'll have to spend some time this weekend going through this. Why? Because it's very important. I need to explain it in the context of rotation. So we've had a rotation, and I need to just explain how I look at rotation. I include everything. So if you look at Bitcoin, typed it in over here. There we go. At BTC, it's pulled back sharply like I anticipated. I said in the weekly chart, there's this trend line that's coming down, but most importantly, we did this Bitcoin futures continuous contract from the high. This is a continuous contract, so the price could change. But right now, we've got it as 76,255 in November of 2021. It plummets down to the 20,000s. And then I chose this particular doji candle to choose your left side, right side price time match. And you had this beautiful cup formation. And what did it do? It did it to the month. It went right there to test the high in March of 2024. It went all the way to 76,880. And that I consider to be a peak C. I could have called it an E because it did not take out the starting point for that move before that went to the November 2021 high. No, I said there's enough evidence this was a brand new move, a new buy signal. I lost the arrow because it's underneath. I'll just put it back here. There it is. And it's in a buy mode. And at some point in 2024, it should go to a peak C, or at least a leg D, a leg D, and then a peak D. So on the shorter term, I said, based on my weekly chart with this Chapman Wave inside track repellent zone and the work I did on that peak G at 75,185, that's what I typed in. But as I said, this does get changed at 76,880. If the date is exactly correct, is on the 14th of March. I said that pullback, and then the equivalent price moved down with a big blue line. Say that it should be taking a consolidation phase. Then it did a retest, and the retest failed under 74,000, and then it came back. So when I was saying a rotation, it said that within each sector, there are certain ways that I like to look at the market, and I put it into the category of gold. And I said gold is rallying, and gold is and the kind of thing that put the pieces of the puzzle together was that Robin Hood seemed to me to be trading on both the gold move to the upside and the Bitcoin move to the upside. So that's how I like to put the package. So what I was saying is that there were so many different sectors. There was the tech sector, but if you looked at the defensive stocks, they like GIS. I mentioned this the other General Mills. They just, since they made their high back in March, they've been really taking a dive. Many of these. So that's what I mean by rotational. And money was finding its way into areas that normally would be good, and they took a dive, and then sectors that held well just found money coming in. And that's the other reason why I think that just on a monetary basis, that is the accumulation of money going into the semis, I think it's kind of run its course, and it just needs to have a breather. That's all I'm saying, is a breather. Now we go to the next thing. So if you look at the IYT, Technical Friday, so I want to be technical here, the IYT is trying to make a U-turn and is attempting to make higher highs and higher lows. Now, it's really important that this leg up right now, it's up 96 cents at 65.50, the IYT, because it also, like the Bitcoin, had this beautiful 70, it had this range of 70 to 71 for a year or two, starting from 2021, and then it plummets down to 48.18. And what does it go back to? It goes to 71 3-4 months ago, and then it pulls back sharply to the 62 area. Now it's attempting to move to the upside, and now we get to the point where are we right now? Now I can say, let's put it together with the AIQ, which is the AI area, which is having a really nice, we're along this, and it's having a very nice session today. And I've got this as a B in the weekly chart, and it's saying that the question will be, does money come right back into where it was, or with a chance that a president who we had before could, and this is just going to be so unusual in the history of the United States, become the president again? Where was the focus for the president? So now let's look at areas like General Motors. So General Motors is in the auto industry. Now there's a lot you read about EVs. 70%, over 50% of people won't go back to EVs. They go back to gas cars. I'll be back. Dow's up 211. We'll talk about this rotation that could be coming up.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, so now we've gotten past the 1020 level. So now there's just a new bunch of people that have assessed everything, have waited a while, and now we're going to see over the next hour and a half, is there more of a concerted effort in buying the market or selling the market? We're going to see exactly what goes on. Let me just move this if I can right here. I got to see. Don't forget, Larry's webinar is going on right here. I stopped in for a few moments. Always fascinating. Had a really good trade on a slide in the Dow, and then I think they covered it. So why am I having trouble finding what I need to find? There it is. I've got it. Now I can see. Oh, I just needed to see. Okay, got it. Now, a couple of things I need to look at. So let me just go through this again. We've had a pullback. For subscribers to Opening Call, we've built up a cash position. And the reason why we've done that is because there have been so many stocks that have just been hammered. It might look like this is a great market, but if you're in the wrong areas, believe me, some of those stocks just got, look at Nike, which has always been a great stock. And right now it's trading. Let me just go to this. And it's in the, let me just have a look here. Yeah, there it is. Okay, NKE, look at that. Look at that red candle. That is, because of earnings. Down 18 at 76.10. And that's a drag on the Dow. So the Dow actually would be higher if it wasn't that. Now, so I want you to talk about this just in terms of retail. Gary had sent me a whole bunch of things with the retail. And the reason why I want to just take a moment here and talk about compartmentalizing is that, look, if you look at the XRT, XRT is trading at 75.17, and this is the SPDR S&P retail. That is just your regular old retail, and it's been struggling. It hasn't broken down. It's just been struggling. If you look at the monthly chart, yes, it has been struggling a lot. If you look at the weekly chart, basically it's had a good rally, and then it kind of went sideways. If you look at the RTH, that's the retail, that's the Van Eck retail ETF, and that has 20% Amazon. That's really different. At least that's the weighting from what I recall reading. You've got your peak D is pulled back. 213.07 was the high in March of 2024. And here we are making a cup formation. And that cup formation says we're in the middle of the range. So it's holding okay. And that's been really helped a lot by Amazon. Look at Amazon all-time high yesterday, and it's in a leg C right now. Probably going to make a peak C by early next week, but it's only, I've got it as a B in the weekly and a C in the monthly. So that's important. So when I say compartmentalize, look, you've got stocks like Shopify, had a spectacular move to 176.29. I think it was with an extra, it was a zero or more back in November of 2021, plummets to 23. And it's really working very hard to come off the gap low and fill the gap. And that went down to the 56 area. Here it is at the 200-period moving average. So what I've said to subscribers is when there is a turnaround in the market that starts to include the broken down stocks, those broken down stocks, and I'm even going to include ARKK right now. That's ARKK is the ARK Innovation ETF, and it's really gone nowhere. And that has those speculative stocks. And I suspect that this market, if it really gets going to the upside from here without a breather, at least a breather in the major indices, not the stocks that we've been looking at, I said, like Shopify, Wayfair, etc. If it takes off from here, it's going to produce something that we've not seen in a long time, and that would be really something that I talk about as a coda phase, meaning, wow, it just forces everyone, it forces people that we're in very conservative areas. It used to be bonds, but that's not such a conservative area anymore. But it forces them from money market funds into the market, just directly, and then probably not into the market, but into the most speculative stocks. Like in the year 2000, folks who had just been really conservative, they were in bonds, they were in all those conservative, they went straight from that. Their grandchildren were telling them, you got to buy this .com, and they went straight, the older folks went straight from the very conservative to extremely Qualcomm, etc., extremely aggressive. I don't want to see that happen right now. I do want to see some kind of rotation that actually includes the Dow's already had a bit of a pullback, but now it includes the S&P. The IWM has already had a pretty decent pullback, and it includes the SMHs, the semiconductors. So that was my point here, and that's why I'm saying I want to see the transportation index start to improve a lot. Now, with that, I'm looking at ARC Innovation, and it is just 125s in November of 2021, slumps down to the mid-20s, and here it is at 44. Yes, it's more than doubled, but it's still way off the 125 all-time high. This will have us stay in the sun if we're going to go into a really big major bull phase. And I'm just saying to you right now, if folks now, I spoke about General Motors, just to mention that everything I'm reading is suggesting General Motors is being pretty good, but overall, a lot of things have been happening in the automobile market, and there are a lot of people I know that have electric vehicles and love them. I've always said, the whole idea of the electric, the speed, we can go from 0 to 60. I mean, when people used to talk about when it was a macho thing to have speedsters back in the 50s, 60s, 70s, etc., just a layperson, just someone who's not even interested in speed can have an electric vehicle that can do an incredible amount from 0 to 60, which they're not going to do, but that car is capable of doing it. So things have changed a lot, but the idea of charging, I was looking at someone the other day who had a Tesla wagon. I saw one go by the other day. Gee, I saw it when they first came out, and I thought, wow, I mentioned it here in the den. That is ugly. I mean, maybe you'll get used to it, but it's not pretty. Also, I don't like chiseled shape. I like round. So didn't appeal to me at all. Anyway, so this guy had this boat that he towed. It was just amazing. It should have had 280, I think, or 300 capacity. And in fact, what happened is it was cut to a third because he was towing the boat. So all I can say is that I'm reading a lot about the disappointments now with the electric vehicles. That'll be repaired at some point or improved a lot over a period of time for sure. But I'm just saying right now. So let's just go back to what I was looking at here. If you are talking about what's happening in the general economy, just based on any optimism or pessimism on the debates, then let's look at something like I think that you can look at Deere. And Deere is having a nice move today, or Caterpillar. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're going to see what happens here. So the E-mini made a PT in the 1-minute chart. It's a leg B in the 5-minute chart, but it's actually a single leg A in the 10-minute chart. So I'm going to just give you parameters that I'd be looking at here to, as I say, 10:20 in the morning Eastern time, going into about the 1:15 area in the afternoon. That's going to be key, because if buying keeps holding up here, then the last hour of the day could produce quite a lot of buying. But if there's a sudden slide, and remember, so just to sum up the statement about last night, is that and that's not, I'm not even talking about the debate, I'm talking about the response of the market to what was perceived by the market, obviously people, right? If there's a sudden give back of what was kind of an optimistic for the market sense in the early morning, and then reality sets in and says, wait, we've got 5 months or whatever it is to go. Anything can happen. That's the area that you've got to be careful with. So there's emotion, and I think from now 10:20 to about 1:15, that's going to be reality. What happens, and then the result of what happens this coming hour and a half, 2 hours, that's what you'll see in the afternoon going into the close and the final. Because, of course, fund buying comes in, a whole bunch of things. It's going to be very interesting. Plus, it's a long weekend. Next weekend, you've got next week, you've got July 4th. So we'll see exactly what happens here. And that's the reason why I said, let's just have a look at stocks like Caterpillar. Caterpillar is up right now. It's up 5 at 332. It's in leg C, actually, off the low of the day. That's going to be important, because if Caterpillar over the next 2 weeks can start to get to the 348, 352 area, I think that makes a difference. That says now we've got the deep cyclicals, heavy duty equipment working, and I think that's important. If it kind of fails and then starts to go towards the 200-period moving average of 312 over the next week or two, whoa, that's not good at all. Okay, so I'm just trying to clarify, this is market reaction. And now you've got the folks who step back and say, let's see what happens. I know what I like. I know what I want. I know what I want to do. So within that context, let's wait for a little later to see what happens in the close. Let me just say the market, the Dow's up 222 right now, up 222. If by, I want to say 215, let's give it quite a bit of time. If by 215, the Dow is holding above 200, I think there could be a really nice close. If it gives back a chunk, and then all of a sudden you're looking at up 65 or 45 and gives back, that just says, woo, there needs to be quite a bit of thinking about this over the next week or so. We can't just jump in and imagine something's going to happen. Nothing happens overnight. Nothing's going to happen at 2 o'clock today in the economy. It takes a while. All right, I just wanted to get that out the way. And here's the other thing, the VIX index. I need to look at the VIX index, the VIX. VIX trading right now at 1212, down 12 cents. it's down in this range. Remember, I drew this line. I said, this is a line we've had that goes on forever in the, it's a horizontal, I call it kind of a base. Every time the VIX index, this is a monthly chart, start to trade below this trend line, which is at about 13, I say it's at about 1350, and we're at 1211 right now. That's the area you've got to keep monitoring, because if it starts to push above it, that's something else entirely. If it pushes above it, then you start to see the selling pressure. So it's below it, and that just says, okay, it's ignoring. It sees a positive action right now. Now I need to do a couple of things. Tesla, I was asked about Tesla. So Tesla is trading up 450 at 201.93. It started this move just recently, and I said, this is the rectangle. This is what I'm looking at. If I wanted, I could draw the H pattern, and I thought I had drawn in the cup formation. It wasn't there. It was like here. I thought I had drawn this in. I guess I didn't. And what I would have said, I thought I had said it actually, is that it's stuck in a range. And I wouldn't be thinking of Tesla as doing anything but stuck in the range right now. I don't see it breaking down yet, but it will if it takes out 168. It never did that. It went to 169. No, I did say close. I didn't say takes out. I think I said close. And what was that low there? 167.41 on the 11th of June. So that's the dreaded H pattern. So technical Friday. Let me just show you something right here. So this is the pattern that we always look at, straight down, and then it tries to hold the left side as it arches over, fails at a peak A or a B, and then it retests. What it does at that retest on the left side, and that was at 160, I think it was at 168 back in May, I said, if it takes it out, it needs to close. Actually, now that I recall it, I think I said it needs to close under 167. If it does that, that'll mean that the dreaded H pattern, the lowercase h, is taken it out. We've got to watch what happens next, because that could become a serious decline. If it holds, then it has to close above and hold for 2 out of 3 bars. That's a daily chart above the high that was made at peak B. That was on the 21st of May, and the high was 186.88. Well, it was lousy. It tried that a couple of times. It couldn't. It hit that number, and then finally, 3 days ago, it went above it. It went straight to the 200-period moving average. Now, what I meant to do was to say this pattern, when the dreaded H is successful and closes above that arch high, it can retest the left side high. And the left side high was the high of the 29th of April at 190.95. Well, it did it in one session. Bam. This is Friday. So it did it Wednesday. Yesterday, it hugged the 200-period moving average. It couldn't get out of its own way. And then, boom, today's up in leg D. And that leg D is at 202.98 as a high today. It's trading at 202. So the question was, will I find the question again? Let me just see what the question is. I had it, and now it's gone. Oh, there it is. Okay. Hi, Basil. Can you look at Tesla as a long on the show? I do have one in the money, Leap. It felt less risky than holding the stock outright. I agree with you. I didn't know they had leaps on Tesla. A leap is like a long-term call on the stock. Does the current move look like a breakout of the recent consolidation versus a fake out? So this is what I need to say to you right here. Let me just get that out the way. Okay. Yes, this is a breakout now as we're talking, because it's pushing away from the 200-period moving average. For me to have a real breakout, you see all the left side highs that goes on since it broke down that ugly candle. I think it was January. Yeah, January the 26th. 196.36 was the high. 192 round number low. And then look what happened. It just tried to rally, went to the 200-period moving average in the weekly, and then failed, and it went much lower and went to the 138.80 low of April. Okay. Yes, I'm going to say now you've got the leap, and the question is, can you look at this as a long? So now you're looking at the actual stock. So the stock is in leg D. just above the 200 period exponential moving average. And being Tesla and being a stock that has a lot of wiggle room up and down and up and down, I'm going to say to you, Jason, why don't you hold off a little bit? I wouldn't add right here, although the weekly chart is saying this is a first time that the 9-period moving average has gone green.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, so just Tesla, I'd say just hold off a minute. I think you're correct. I like it. It's doing well. So Tesla is trading at 202. I prefer the 197 to 195 area just to actually consider the start of a position just because it's in leg D. That's number one. Number two is the weekly chart is good, but it's right just above the 200-period moving average. So I give it just a little bit of time to rest, and then we'll see what happens. In the Jan, we had dude says AVPT. We were looking at this. It did extremely well. And right now it's trading at 10.32, up 8 cents. At a peak D, it's just resting, and it's a D in the weekly chart. This is Everpoint looking very good. And then you mentioned Uphold, up APLD. Did I type the wrong thing right here? Or did I buy something by mistake? Oh, what's going on? Uh-oh. I'm hearing ping, ping, ping. Oh, it's over there. There it is. Okay, so let me do this because we're going to wrap up. I just wanted to say I think you're correct. I think it's coming down. I had a look at it just before we came, LD. Oh, I got the wrong one. ASPN, I think it was ASPN. Yeah, I think ASPN, correct. It is going down. It's looking poor. It's down 77 cents. Let me just sum up quickly what I'm looking at. And just to be clear, we do have a short position in the S&P with a very tight stop. And it's only trading because everything I was looking at, it says this is really good. But I'm basing it, and I thought I'd do a lot more today on Microsoft, but Microsoft has made that leg D. It looks like a peak D. I think it's getting ready for a little bit of a breather. We're long, it's fine, but I'm waiting for that stalk leg formation next week to form, so we'll be looking at that. In the meantime, what I am saying is to subscribers, and I'll do my webinar probably for this evening for my weekend overview, a webinar for the week. I think that we are in this digestive phase, but I do think we're starting to see money go into areas that we've been talking about for a long time. Now we can start to put money to work in a different way for the first time. I'm looking forward to that. Folks, Steve Rhodes coming up. Have a wonderful weekend. I'll see you Monday. Check out my opening call there.